welcome on board Chakri Lokapriya, the managing partner at RSV LLP, and getting his views about what he's making about the market right now. Chakri, good afternoon. Thanks so much for joining us. Wanted to get your take on the entire banking and financial space, especially after that brokerage note on from UBS that we've seen this morning. Quite the bearish note coming in, and while you have the private banks that seem to be holding up rather steady in today's trade, it's the PSU banks and the broader financials that seem to be taking it on the chin. The likes of Shriram Finance, you have IOB, Canara Bank, all of these banks are not doing pretty well right now. Give us a sense of how you would like to play this banking space, and do you believe that private banks have it in them to outperform the PSU banks going ahead?
Yeah, good afternoon. Thanks for having me. I think, the note kind of talks about everything that was already largely known in terms of, the loan growth has slowed down, provision coverage has been strong, the credit ratios have kind of held up. And, with the interest, so against this backdrop, I think what is required is, clearly an RBI needs to cut rates sooner rather than later. So now when that happens, now it's supposed to happen in Feb. But if it does happen sooner, then then becomes the cost of funding becomes lower. Then all the opposites happen. Loan growth accelerates, and therefore the margins improve for the banks. So having said all that, still, all the spending is happening only with the government capex largely, and therefore, the PSU banks and PSU financiers will continue to benefit. SBI, Canara Bank, PFC, REC. These are the main beneficiaries of the government capex.
These are the main beneficiaries, but for now, the PSU banking space is clearly coming under a lot of pressure, whether it's a IOB, whether it is a UCO Bank, whether there are central bank and other names from the entire banking pack. All of these are in the red right now. Kunal, if I had to ask you the strongest chart in the PSU, universe, barring SBI, which other stock would you recommend?
PSU banking name, if I exclude SBI, then Bank of Baroda is the next best bet. In this leg of recovery for the market. So we look at this not just as an intraday recovery, but we look at this from the 20th, 21st of November. Is that which stocks have recovered, the finest in the PSU banking lot, and that stands to be, of course, SBI and then Bank of Baroda. You also have recovery across Canara Bank and PNB, but the only distinct part about the charts for these two names as compared to Bank of Baroda is that Bank of Baroda has a slightly higher edge. The stock had broken past above its 200-day moving average in a very short span of time, and the recovery what we've seen has been more formidable on the back of higher volumes. We also look at the correlative days. So when the bank nifty moves up higher, what are the odd days when the which of the PSU banking stocks have participated when the bank nifty moves up higher? That's what we assess in terms of correlations. Even on that front, Bank of Baroda stands to be one of the better performing stocks. So I think other than SBI, if I have to take a bet or recommend at current levels, Bank of Baroda would stand out.
Bank of Baroda standing out to Kunal on the charts at least, but let's understand the action that we have seen in the entire banking and financial space today. While private banks have recovered, remember in the first half of the day and even now, PSU banks continue to be beaten down in today's trade, along with the broader financials, the names of Chola Finance, you have Shriram Finance also that's not been doing pretty well today. Let's take it across to my colleague Gaurav, who's standing by with a brokerage note that's come out from UBS this morning, and that highlights a lot of bearish stance that the brokerage has on all of these companies. Gaurav, take it ahead.
Well, yes, amidst the volatility, UBS has come up with very interesting note. What they have highlighted is that when we talk about non-performing loans, they are saying they are seeing some kind of rise in delinquencies, specifically in the commercial vehicle and the business loan segment. Specifically, when we talk about commercial vehicles, they are seeing early delinquencies increasing almost by 150 basis points in the month of October if we compare it with March 2024. Other than that, they are also saying that these delinquencies are led by mid-sized private banks as well as NBFCs. And on the back of this, they have now cut the target price for a few NBFCs like Chola Finance, Shriram Finance and M&M Finance. And at the same time, when we come to banking sector, they have cut the target price for IndusInd Bank almost by 200 rupees. For AU Small Finance Bank, they have cut the target price by 110 rupees. And they have also cut the target price for Axis Bank marginally. What they are saying is that there is some stability which is seen in loan against properties. And at the same time, static pooled analysis of disbursement also shows some kind of deterioration in portfolio quality. And that is the reason why these concerns are rising from UBS. Lastly, amidst all these the chaos that is happening, they have also increased their credit cost estimate across the segment by 2 to 25 basis points. But even within this chaos, they have reiterated their focus on HDFC Bank, ICICI Bank Bank and Federal Bank, saying that these banks are their top picks even in this environment. So definitely watching out on all these banks on the back of the very pessimistic note coming up from UBS.
Okay, so that's a fundamental, technical, as well as a brokerage view on the entire banking pack. Thanks so much, Gaurav, for that. But in the meantime, Naresh, what's the sense on chart of Westlife development? That one is seeing quite a bit of perk up. Jubilant, of course, has been fairly volatile. And from the textile pack, it's KPR Mill and Vardhaman Textiles which are holding up. Any recommendation on the charts?
So Westlife and those names, Westlife I don't track closely, but if you look at textiles, it's a structural breakout across the board. So KPR Mills has hit a new all-time high. You have Gokaldas Exports hitting a new all-time high. You have smaller names like PDS breaking out. You have Vardhaman Textiles making a 20% move. So the structure is very clear. Nitin Spinners hit a new all-time high recently. So textiles as a sector, there are almost 20 names in different baskets, but the sector looks very promising in terms of price volume breakouts across the small to large names. So at dips, Gokaldas Exports would be good. SP Apparels is one which has yet not broken out. That looks promising for the short-term breakout.
Okay, Chakri, coming to you, I want to get your sense on the QSR space as a whole, because today Westlife seems to be outperforming its other peers in that basket. But if you take a look at this overall moves that the companies have seen, especially the earnings move and in respect to the same store sales growth, that's not looking very optimistic. But you have some analysts who believe that there is still some danger, but things are turning to look around better for this QSR space. What's your view going ahead, and what do you believe Q3 is shaping up to look like for these companies, especially when it comes to the SSSG growth?
The QSR space has slowed down for various reasons. One is the general consumer slowdown, which has kind of impacted the same store sales growth for these companies. Now, outside of that, their products continues to be as fresh as it was. So that is not the issues, and consumer preferences have not really changed. So against this backdrop, I think it's a question of that macro recovery which is needed for consumer sentiment, corporate sentiment to pick up, for the spends to come back. Now, that is usually happens now during the festive season, and thereafter in the coming summer, which is the first quarter of next year. The calendar quarter, that is. So I think that is the time when we will see earnings recovery. The stocks have corrected quite a lot. So I think Jubilant Food, Westlife, I think begin to nibble at.
And have you started nibbling at the likes of ITC and HUL and Daburs of the world? Got quite a bit of drubbing after GCPL's Q1 update, but maybe it's unfair to paint everyone with the same brush.
That's a different cup of tea, because they are FMCG companies, and their lack of product innovation has held back the sector, and also how much more of the same toothpaste would a consumer buy. So outside of cyclical reasons of urban and local, urban and rural. So I think that as an issue is not going away for the entire sector. Whenever there is a new product introduction, you might see an uptick, but with already valuations trading that high, they're profitably run companies, but there is no catalyst for the stock prices to go up.
Well, for the markets, doing quite okay. In fact, at the highest point of the trading session, not giving up. That's the good news right now. Yes, last 10 minutes left, but more or less we are likely to close very close to that 24,800 mark. Kunal, what does this tell you about the texture for the coming week? Because of course there's a big event lined up in the coming week, and that's the FOMC meeting. So the Fed decision will be out. Apart from that, of course, we're watching out for the BOE decision as well in the coming week. There is some data which is expected from India as well in terms of PPI, etc. and all of those numbers. But what do you make of the market texture if we do close above this 24,700, which was acting as a bit of a resistance all throughout this week? Are we likely to hit 25,000 in the coming week?
What this does, Anisha, it's a very, very valid and a very interesting question, because what this move today does is that it gives an indication that the leverage or the over leverage confidence which was there in the markets, that's now out, because today, of course, many of the trading positions would have been squared off, and now in the second half of recovery, there could be more renewed confidence which could have come back into the indices. So I think everyone will be waiting for a follow through up move and then try to build on positions, which means that today's up move should have more legs going to the next week. What this also does, over the last 2 or 3 months specifically, we've seen many a times when the Nifty was down 200, 300 points, but there was hardly any point where the index showed any kind of a major recovery, and that too sustainable recovery, which lasted throughout the day and the closing of the day as well as the week. Now, what this move signifies is that this recovery what we've seen is a completely distinct recovery than the last 2-3 months of the market selling, which means that the bullish texture is still intact. The base, which was at 24,000, now gets lifted to 24,200 to 50 mark, which is the intraday low for the index. And the third and the most important point, Nisha, is that the large cap stocks today have been doing pretty well. So even though the advanced return ratio at the last I had seen was still into the favor of declines by 1:2, the recovery on intraday basis gives indication that the recovery is more on the large cap names. And when large cap stocks they recover, it generally gives an indication that this leg of recovery is not a very feeble recovery, but it's a very strong recovery, which should have more legs going forward. So all in all, looking at all of these three factors, my belief is that 25,000 should be achieved in the next couple of trading sessions. If not, then at least over the next 1 week.
Sounding optimistic on that 25,000 mark, getting closer to us now within touching range. But Kunal, point taken that we have some up moves to this rally coming ahead. But Nuresh, I want to come to you and ask you the kind of volatility that we are seeing on an intraday basis, no matter which way we swing going ahead, and hopefully that's towards the greens only, continuing on that front. But do you believe intraday sessions going into next week could see the kind of volatility that we're seeing in on a span of 6-7 hours that we're trading, the kind of volatility that we're seeing? Do you believe those massive jumps could also be seen intraday going into next week?
So the last 2 weeks we've seen volatility on the expiry days. So last Thursday it was Nifty. This time today it is Sensex expiry. So we'll continue to see volatile moves on the expiry day. But overall, we need to see what happens the next day. So last Thursday we saw a similar tick like today, but for the next 5 sessions there was nothing. So would look back into next week and how do we react on Monday. That is more important rather than what is happening today. So if we continue momentum and close about 24,800, we open up a move to 25,200 as well. So overall, the bias is positive after today's closing because we've seen a lot of heavyweights do well. So it's not just a few names, it's across the board on the heavyweight space.
So that's the momentum which is on the upside. But Chakri wanted a better sense on the IT pack, because in between it was all about the mid-cap IT and the niche IT companies like KPIT, LTTS, which had a bit of a tilt towards auto, which were doing well. But that now seems to be reversing and people are flocking back to the likes of Infosys and TCS. Is that the trade you would recommend as well?
IT as a sector with a large cap or mid cap, I think, are extremely well positioned from an impending US recovery that's going to come from January onwards. Because of the new Trump administration, US tax cuts, all that will help in discretionary spending in the US, which translates into orders for the Indian IT companies. Now, whether it's the KPIT, Mindtree, Cyient, those companies will benefit from an increased, ERD spending, which kind of took a backseat in the last 1 year. And on the other hand, cloud computing, which will benefit all the frontline Infosys, TCS, HCL technology, that segment is expected to grow a solid 35-40% in the coming year. So given all this, we would buy into both the frontline as well as Infosys, TCS, HCLT, as well as Cyient, KPIT comments.
Chakri, thanks for that view coming in. So optimistic on the entire IT space across the large and the mid caps. That's the view coming in from Chakri Lokapriya. Chakri, on that note, we'll let you go. Thanks so much for taking the time out and speaking to us today on ET Now. But on that note, Kunal and Nuresh, coming to you now. Kunal, you first. Tell us what are your BTSC trades that you're picking up and what's looking attractive heading into next week?
So I'll go with a few large cap names. Page Industries is something which has been doing fairly well. In fact, the stock has hit a fresh, swing high, crossing the levels of 48,000. So that's something which I would suggest as a buy for a shorter term target of 50,000. Stop loss could be kept at 47,500. And of course, HDFC Bank remains to be one of the top favorites in the private sector banking names. It's very close yet again towards making a fresh lifetime high, crossing levels of 1870 plus. So my bet is on HDFC Bank over the very near term, targets of 1920 and stop loss at 1830.
Industries and HDFC Bank continues to be a Kunal Bothra favorite. We're not surprised on that front. Kunal, Nuresh, coming to you. What are your BTSC trades for next week?
So going a little more defensive, first is the Bar and Power Grid, which has been sideways and relative strength. Stop loss at 330, target price of 340. Second is the Bar and Maruti, which is struggling to cross above that 11,300 mark. Today also an attempt done. Stop loss at 11,230, target price of 11,400.
Point taken. Kunal, help me with the chart check on Manappuram Finance as well as Glenmark Pharma. Quite a bit of action and volume-based action on those names.
In fact, Manappuram Finance is a very interesting case, Anisha, because I remember that there was this negative news flow for the stock and it had fallen down by, I think, 10%, 15% in just a matter of few days and dragged down to, I think, around 150, 160 levels. But, post that, there was no follow through selling for Manappuram Finance. So earlier, I think when the stock was at 200 plus levels, I think sometime back, 6, 8 months back, there was a very similar kind of a sharp selling for Manappuram Finance. And post that, the stock had fallen down significantly. So, with this lack of follow through for Manappuram Finance and the price uptick, what we are seeing is an indication that a major base or a bottom is formed for the stock. I would actually be very bullish on Manappuram Finance, and my expectation that the stock could be coming back again to that 200 mark potentially over the next 3 to 6 months at least. That's the time frame which I would expect as minimum. On the upside, Glenmark, that's also an interesting chart. Today the volumes are exceptionally high. The stock has formed a swing low, but then recovered and come back again to close at 1500 plus level. So that's another name to look out for Glenmark. My expectation is that the stock could be giving a potential return of at least 5% swing upside over the very near term.
Kunal, Naresh, thanks for joining us. We'll let you go on that note. Both of you, thank you so much.
If you like this video, then like, share and subscribe to ET Now.